Hey there, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in residential new construction for investors in the Oklahoma City and Tulsa market. This is Monday, the September 22nd. Time flies, man. This year is just going so fast, I can't believe it. But something happened recently which made, I think, a lot of people happy, which is the Fed funds rate went down 25%. Now, I had a lot of investors that are going, well, I don't want to buy yet. I want to see what the Fed's going to do. And I kept saying, you shouldn't do this. The bond market already baked in low rates, and the bond market looks at a lot of different things than the Fed does. The Fed primarily is looking at inflation. They're looking at the job report. Bond market is a little bit more comprehensive than that. And so guess what happened? When the Fed dropped 25 basis points, yes, short-term rates are great. They're better because if you want to buy a car and finance it, on a 2 or 3 year basis, you're in good shape. But what happened is 10-year treasuries didn't do that. They actually went up from about 4% to about 4.125%. And so it went the opposite direction of what I was warning people about. And so rates didn't really drop that dramatically. In fact, they just went up just a little bit. And so what this means is we have builders, big builders like Lennar and D.R. Horton offering special deals. They are going behind the scenes. They are buying these huge packages of mortgages, paying a lot of money for this, and buying it down to a rate that you can't get. All right, so you can buy an existing home all you want at 6% interest rate, but why not buy a new construction, brand new, for 5.25% with no points? Or take the 2% closing cost allowance and buy it down below 5, say to 4.875 fixed for 30 years, or take a adjustable rate mortgage that's fixed for 7 years at 3.99. They're offering you a deal. Now, why is this? Is existing homes are different than new homes. Existing homes aren't selling that well because people paid way too much money for these homes during COVID, $20, $30, $40, $50,000 overbids. They can't sell them. New construction didn't happen that way. And these builders, especially these two big builders, are after a lot more market share. They are really prioritizing market share over profit, over margin. Now, that's not going to last forever, but that is why they're buying these rates down, where you can get these terrific deals. And in some cases, they're adding extras. They're adding, fence blinds, garage door opener, washer, dryer, refrigerator, whatever, to get you to buy a home. And these deals are not going to last forever. In fact, we've been through we're almost through our second launch of this money. And the third launch may be more expensive. So it's something you need to take advantage of. September is not typically the time that people buy either as owner occupants or investors. But when deals are out there, you have got to go for them. And we have these in the Oklahoma market. And I'm sure they're in other markets if you're not buying here. But look at them very, very carefully. They're even better for owner occupants, but you're an investor. You really need to take advantage of this because as a stockholder of stocks, of companies, I know that I want them to make as much money as possible. And if they're subsidizing this stuff, they're not making as much money. That doesn't make me happy. There will be return to market share. So take advantage of this now. It's a unique situation I haven't seen in the last decade. These are great rates, great prices. It's time for investors to step up. You're not going to see this forever. It is going to end.